Hi friends, this is Bank Nifty 5 minutes chart. So in this video we are going to analyze how price has behaved, how we have assured some positions, and how did we develop some long bias and what clues have we taken to see where to exit trades. And at the last we'll also discuss how the market is possibly going to behave tomorrow. Now, as we expected in the last video, if you can see in the last video, we have mentioned that sellers in this zone are dominant and buyers in this zone, and that is exactly is what is reflected in today's market. The market created a strong bearish candle and price coming down. But we noticed that as price is coming down, it created a very long wick at its bottom. Look at the size of this wick. It is almost double the size of this body. So which means that we assume that the buyers in this zone are not so active, as good as not as good as sellers. Actually, sellers are taking market down. However, there is a lot of buying pressure. That is the first impression. Since we have already notified that sellers in this zone are going to be dominant, we have assumed short position exactly at the very close of this candle with the stop loss above this high. And then we expected the price will reach, since there's a lot of manipulation, a lot of price movements uh, in a very vague way, we expected the price will at least reach uh, this textbook demand zone that was created earlier. So as you can see, price reached this zone and created a bump up, created a higher high. Now that is the first impression for us that buyers in this zone are active. Now what about sellers? Sellers, as they're coming down, as they are just not coming down as and when they are coming creating lower wicks, lower lows. You can see here price is creating fractal bars. That means, and there is a lot of buying pressure, which means that it is the action by market makers to induce retail traders into short positions and immediately take long positions in the upward direction. So this is entry and re-entry of market makers in the upward direction. Now they have done that to extreme of this inward frequency of this already created demand zone between these red lines, and then immediately there is a strong higher high. That means I'll clear the lines for you to make things clear for you. And immediately when they touch this demand zone, you can see that price has created higher high and it almost closed this high here. So which means that this could be a good market structure. I mean, a solid market structure. Now, as price moved a little down, it again tried to close below this, but did not close. It only poked and then went up. And that poke has exactly happened at the outward line of this already created demand zone. So this is the point where you can assume that buyers in this zone are still active and they might want to take in the long position. Now, how do we develop this bias? First thing is, nowhere the sellers are unable to create a low. That means they break this low of these candles significantly. First thing. Second point, this is the birthplace of major buyers who have taken market very high. So this is a major demand zone, and this is the demand zone of minor sellers. Okay, sorry, supply zone of minor sellers. Now, as a rule of thumb, will the minor zone be dominant over major zone? Certainly not. A major zone will have more power than the minor zone, especially if you add context like this. The bias that buyers are going to take the market high is only going to increase. So with that, we have developed the bias of long trade in this position, and then we have also drawn a wash line. If you don't know what the wash line is, please go and watch my previous videos, so you'll get to know about that. So if you draw a wash line here, and when price touched that wash line, it created a very long and high buy pressure zone in this wick. So this is exactly the point where we have entered the buy zone, and that this also is happening at the inward frequency of the already created demand zone. So this gave us an impression that this is a good opportunity to go long. Okay, now we might be certainly wrong about this. However, we have to assume certain risks and develop some bias to be able to trade. Now, since these highs that are already created are minor to this buyers from the major zone, we can safely assume that if at all the price is going to stop, it is only going to stop at the already proved what do you call already proved supply zone. So this is the point where we can expect price to reverse. So we have entered a buy position exactly at this position with a stop loss below this low, because if you assume this low, maybe one more wick down may, maybe because of the intervention of market makers or because of the natural noise that price generally creates, we may trigger stop loss. So we have entered this point exactly at this point, a CE position 42,100 42,000 CE position with a stop loss here, and then we expected the price to reach this position, and that's exactly as what happened here. And to add context, to add line work to our context, we can draw a pitchfork in the major dimension, and you can see that prices almost respecting this prices respecting this pitchfork in this minor flow, and to be able to tune it to the exact length, because there is some price shifting happening here, we just have to fine tune that to the outward frequency of this normal demand zone. Now we can see that the price shift is included into this frequency, and price is now beautifully respecting this midline of this pitchfork. However, we expected the price to reach to this level, since there is a very strong downward momentum here in the last two candles. We expected that the price may encounter some strong sellers in this zone, and then we have exited trade at this position. Now, this is how we analyze trade, guys, and if you're interested to know how to learn these advanced techniques to read price and then take positions, we can assure you of giving very advanced way of interpreting the price and then entering positions. We can teach you on price action, we can teach you on market maker strategy, we can teach you on Newton strategy, we can teach you on extraordinary line work where you can possibly not be able to see in any price analysis. This is about this video, guys. I'm also going to launch another short video where we are going to interpret how the market is going to behave tomorrow. So with this note, I'm signing off and see you in another video. Thank you.